Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1303A, and today's date is June 11th, 2017, and the title of the episode is, according to the latest data, we could be weeks away from an economic crisis. Now, before we get started, I just want to make an announcement. On Saturday, I uploaded an interview to the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It'll bring you right over to the video, or you can come over to the X22Report.com site, scroll down a little bit, look over to your right-hand side. You can play the video right on the site. You can do the same thing with NewsSentinel.com. Scroll down a little bit. Look over to your right-hand side. You can play the video right on the site, or you can go to Steemit, and all you need to do is type in steemit.com. That's STEEMIT.com. Go to X22 Report, and you can play the video right on the site. Let's get into the economic collapse financial news. Now, we've been looking at many economic indicators, and we've been noticing something that's very interesting, is that all of them are starting to deteriorate, decline very rapidly. And we talked about the Restaurants Performance Index before, and we see coming out of Black Box, their report, it shows that things are not going very well in the restaurant industry. Now, based on weekly sales data from over 27,000 restaurants and about 155 brands representing about $67 billion in annual revenue, what did we find? Well, we found that in May, it was disappointing, and chain restaurants are not doing well. Same-store sales were down by negative 1.1%, which represents a 0.1% decline from April. At the same time, same-store traffic growth also dropped by 3%. That's down 3.2% on a rolling 3-month basis. Now, what we're seeing here is things are rapidly deteriorating. People do not have the funds they used to. And as more and more people lose their jobs, because people are losing their jobs in retail, with major corporations, we see that it is taking its toll. Now, more concerning about all of this is that the restaurant industry has not reported a month of positive sales since February of 2016. And this is according to Black Box. Now, when we look at the National Restaurant Association, their report shows pretty much the same exact thing. Result of softer sales, customer traffic levels are down, and optimism among restaurant operators, well, that is declining. And we can see right now, if we look at some of the data, 22% of the restaurant operators said they expect economic conditions to improve in 6 months. That sounds, well, that doesn't sound that bad, but that's 15% down where it was 6 months ago. So really, it was 37% thought it was going to be better times ahead of us. Now only 22% believe there's going to be better times ahead of us, which leaves the rest saying things are awful right now and we see no improvement whatsoever. And we can see from the retail industry, that's collapsing for a reason. Now it's moving into the restaurant industry, which we've been seeing for quite a while, but it's actually deepening now. And we're starting to see financial institutions fall apart. We know that Banco Popular, well, that was bailed in. We see another bank in Spain, well, they might be right behind Banco Popular. This is Liberbank. Now, this is a mini Bankia that was spawned in 2011 from the forced marriage of 3 failed saving banks in Spain. And we see already right now that shares already have plunged 17%. At one point, they were down 38%. And we might be seeing another bail-in. This is like a domino effect where it's going from bank to bank to bank. Now, Goldman Sachs is saying that the last time the market acted like this was at the tech bubble peak. And we're starting to see a lot of economic indicators, especially very important ones, which always bring us into a recession when this happens. And one indicator, well, it has remained a fail-safe marker of economic contraction since the 60s. And every time commercial and industrial loan balances have declined or simply stopped growing, And that could be for any reason, for tightening loan supply or declining demand. Doesn't really make a difference. A recession has already been in progress, or it was going to start soon. Now, from all the economic indicators that we've been looking at, we realize at this point we're already in a recession. Now, the government's not going to come out and say, hey, we're in a recession. They don't do this until months and months later, and they go back in time and they say, oh yeah, by the way, the recession, it started in July of 2016, just to let everyone know. Even though at that time they were saying there was no recession. So what we're seeing right now is these indicators that are pretty exact on letting us know when there is a recession or a great economic crisis headed our way. And if we look at the commercial and industrial loans, every time we reach a certain peak of where all of a sudden loans start to decline, where the creation is not there and it starts heading the other way, we end up in a recession. Now, we saw this back in the 90s. We saw this back in 2000, 2001. We saw it back in 2008. And here we are in 2017, and we're seeing the same exact thing. Now, U.S. loans have failed to post any material increase in over 30 consecutive weeks. Suddenly, the U.S. finds itself on the verge of an inflection point. Now, after growing around 7% year on year, we have declined by 3% at the end of March and 2.6% at the end of April. The latest bank loan update from the Fed showed that the annual rate of increase in the loans is now down 1.6%. This is the lowest since 2011. Now, let's take the commercial and industrial loans. That is declining now. We've stopped growing. Let's look at the commercial bank loans right now. Now, we've discussed this in the past, and we've been noticing that it's been declining, and we're not seeing any type of growth anymore from this area. And if this persists, if this deceleration persists, well, we're going to end up in a lot of trouble, because we see commercial and industrial, we see commercial bank loans, and the U.S. right now will post its first negative loan growth, or rather loan contraction, since the financial crisis in roughly 4 to 6 weeks. Let's look at the real estate loan. Now, after peaking in late 2016, real estate loan growth has decelerated by nearly half to 4.6%. Let's take a look at commercial auto loans. Now, this started around September of 2016, and there has been a sharp slowdown in commercial auto loans. And the growth now is down to just a third, or 3%, of what it was a year ago. Now, keep in mind, the Fed this week is going to be looking at the economy, and they're going to make a decision if they should raise the interest rate. Now, they realize that the first quarter, it was a complete disaster. Even though it was revised, they said it was an anomaly. It was a one-off thing. The economy is going to improve going forward. But everything that we've been looking at is that the economy is declining. I mean, think about what we've been looking at. Retail stores. I mean, they're projecting, 9,000 to 10,000 stores closing. Bankruptcies are going to continue. Next year, they're factoring that there's going to be about 13,000 retail stores. We're seeing auto loans, real estate loan, housing, existing home sales, new construction. It's all declining right now. Right now, everything that we've been looking at, it is a complete disaster. Now, we know the Fed raised rates even though the first quarter GDP was a complete disaster. We know the unemployment numbers are manipulated. The stock market's manipulated. Pretty much everything that we're seeing is a manipulation. Now, the Fed is going to look at the data, and they're going to say, yes, of course, they're going to say unemployment's down at 4.3%, the stock market's going up, and the economy looks pretty strong. They might make the decision to raise the rates at this point, saying that the economy is fine. Now, we know in the background, the economy is not fine. Things are rapidly falling apart. I mean, think about the things that we've been looking at. It is a complete disaster. Now, one, they might have already triggered the economy coming down, because since they raised the rates the last time, things have accelerated. and things have turned to the downside. So they might not raise the rates because they already see that the economy is faltering. This is really why they're doing this. They're trying to trigger the economy where it starts to accelerate to the downside. This is what they wanted to happen. They did this prior to 2008. Now, if they raise the rates, that means the last interest rates that they brought up, it didn't trigger what they wanted. So they'll raise the rates again. Now, of course, they're going to be talking about how this economy is so strong. They're going to be raising the rates. But we've been looking at all these different economic sectors, and we're seeing that they're not strong at all. Things are rapidly deteriorating. Look at the automobile industry. I mean, with the channel stuffing and how they can't get rid of cars right now. The real estate industry, a complete disaster. Forget about retail. That's an apocalypse. And everything else is manipulated. I mean, yes, we have the bond bubble, we have the stock market bubble, we have all the manipulated numbers, and we can see right now that we're at this point where this whole economy could come down in a matter of weeks. Depending on how all this plays out, this could all come down in a matter of weeks. This is how close we are to this disaster right now. Because when we look at everything is contracting all at once. And of course, many people are out there, they don't see any of this. They will not see any of this until it's too late. And this is why we've been watching this very closely. We don't want anyone to come out and say, hey, wow, the economy just fell apart because of Trump and he's the one who caused everything. Well, we know that's completely fake, phony, and false. We know this has been falling apart for a very long time. We've been watching it fall apart. It's almost like watching a dam where you get one hole and water squirting out and everyone's telling you it's fine, it's just one hole. And we say, well, we're going to watch it, and all of a sudden you see the crack get a little bit bigger, a little bit more water pile comes out of the dam, the crack grows even further, and people say, don't worry about it, there's nothing to watch here, the dam is strong enough. And we say, well, it doesn't look good, because when we look last year to this year, it has gotten a lot worse. And people say, no, don't worry about it. And all of a sudden, the crack is getting bigger and bigger and bigger. And before you know it, the dam bursts and water is flooding everywhere. And people say, wow, that just came out of nowhere. No one even knew that was going to happen, except the people that were looking at it, just like during the 2008 crisis. Those individuals that were looking at the subprime securities, they were looking inside of the securities, and they said, listen, we know there's a problem here. It's going to hit. Now, people said, well, you've been saying this for 2 to 3 years. You're ridiculous. You have no idea what you're talking about. Guess what? All of a sudden, out of nowhere, it just hit. No, they said it was going to hit. They just didn't realize how things could be manipulated, how people could lie so well and hide the truth. The same thing is happening right now. This is why you need to get ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.